Hello and welcome back to the TaxTron Web tutorial video series. In our last video, we covered the sale of a principal residence and walked through how to report it when the property was owned as a principal residence for all the years you owned it. Before we dive into today's content, let's do a quick recap. The Principal Residence Exemption, or PRE, is a key benefit for Canadian homeowners. It allows you to exclude all or part of the capital gain from the sale of your principal residence from your taxable income. In simple terms, if you sell your home and it qualifies as your principal residence, you may not have to pay capital gains tax on the profit from the sale. To qualify for this exemption, the property must be owned by you or your spouse, be ordinarily inhabited by your family, and be designated as your principal residence. The land should generally be 1.24 acres or less. Today, we are going to explore different scenarios related to the Principal Residence Exemption, and I will show you how to report these scenarios using TaxTron Web. Since we've already covered the scenario where the property was owned as a principal residence for all years in the last video, we will focus on some other situations this time. So, let's get started. First, log into TaxTron Web and go to your T1 clients. Open one of your clients' return and create a new return for this specific example. Start by completing the Personal Information section under the Identification tab. Then, navigate to the Income tab from the left-hand menu. You will need to answer the question, "Did you work in 2023?" Select Yes, and check the box for T4. Let's go ahead and complete the T4 with an income of $98,000, as shown on the screen. After entering the T4 details, you will notice that this person owes $13,109.72. Now that we have completed the basic information for this tax return, let's move on to our first scenario. Scenario 1. Principal Residence Exemption for some but not all the years owned. Imagine you purchased a home in 2010 for $300,000 and have lived in it continuously as your principal residence. Now, in 2023, you are selling the home for $600,000 and lived in it as your principal residence for 10 out of the 14 years since. Let's see how does the Principal Residence Exemption impact your capital gains, and what does this mean for your taxes? Let's jump back into TaxTron Web to see how this is reported. Go to the Address tab, and if you scroll down, you will find the question, "In 2023, did you sell your principal residence?" Select Yes, and continue by clicking Next until you reach the step called Sales of Residence. Here, complete the address of the property. Next, you will need to answer a crucial question. Was this your principal residence for all the years you owned it, for some but not all years, or for multiple properties? In this part, we will focus on the second option, some but not all the years owned. Since the property was purchased in 2010, enter 2010 as the year of acquisition and 2023 as the year of sale. Then, enter the proceeds of disposition as shown in the video, which is $8,649,000. Next, you need to enter the number of years the property was designated as your principal residence after 1981. So as per our example, enter 10 years for number of tax years for which the property is designated as a principal residence after 1981. This will help calculate the taxable capital gain for the years when it was not your principal residence. Scroll down further, and you will find the section called Financial Information, where you can enter the outlays and expenses related to the disposition. For this example, enter $78,000. You will also need to report the adjusted cost base at the time of disposition, which in our case is $4,456,000. Enter that amount here. Now, let's see how the taxable capital gain is calculated. Print the record keeping from Review and File section. Scroll to a form called T2091, designation of a property as a principal residence by an individual, other than a personal trust, and then go to page 3, Part 1, where capital gain exemption is $4,115,000, which is a result of proceeds of disposition minus adjusted cost base plus outlays and expenses. And as property was owned for some years, not all, so capital gain exemption proration will happen as shown below. Capital gain before principal residence exemption, multiplied by total number of year of principal residence, divided by total number of owned, is equals to $3,233,214.29. Hence, net capital gain equals $881,785.71. To see the reporting of capital gain exemption, go to Schedule 3, and you will see that the gain of $881,785.71 will be reported under the personal use property section. So, your taxable capital gain will be $440,892.86, which will be reported on line 12,700 of your T1 General and added to your income. And that wraps up this scenario. Let's move on to our next scenario, which involves a special rule for the principal residence capital gain exemption. Let's assume the taxpayer had property 1, which was their principal residence for all years. They put this property up for sale in 2023 and purchased another property that also became their principal residence in 2023. In this case, the +1 rule applies. This rule allows a taxpayer to treat both properties as eligible for the principal residence exemption in a year where one residence is sold and another is purchased, even though only one of them can be designated as the principal residence for that year. So, the taxpayer can check box 1, at line 17,900, on page 2 of Schedule 3, to designate property 1 as their principal residence for all years, including 2023, or for all years except 1 year, and claim the principal residence capital gain exemption. Let's practice this with an example. Imagine you bought a home in 2010 for $300,000 and lived in it as your principal residence for 13 out of the 14 years since. You are now ready to sell it in 2023 for $600,000. Going back to TaxTron Web, navigate to the Sales of Principal Residence step. Complete the address for the property, and while selecting the principal residence option, choose Some but not all years, multiple properties. Enter 2010 as the year of acquisition and 2023 as the year of sale. Next, enter $300,000 for the proceeds of disposition, and enter 13 years for the number of tax years the property was designated as a principal residence after 1981. In the column for the adjusted cost base at the time of disposition, enter $600,000. Print the record keeping and scroll to Schedule 3, where you will see that the first option, I designate the property as my principal residence for all of the years that I owned it or for all of the years that I owned it except 1 year, is selected. As a result, there's no capital gain reported on Schedule 3 for the sale of the principal residence. If you want to see the detailed reporting, scroll down to Form T2091. Since taxpayer sold property 1 before the end of 2023, he will need to complete the first page of Form T2091, IND, designation of a property as a principal residence by an individual, other than a personal trust. This form is essential for officially designating the property as his principal residence and ensuring that the exemption is correctly applied. And that's all for this video. Thank you for watching. If you found this tutorial helpful, don't forget to like, comment, and subscribe for more helpful tutorials. See you in the next video.